Hi, this is Randy Finney with Right Side of the Chart, and this is a kind of a late session update for Friday, January 16th, 2026. It's 2:30 on the button Eastern Time, so we've got about an hour and a half left in the trading week to go. This one isn't one of the more time-sensitive videos. What I want to do in here, there's several things I want to cover, and I will do in this video, and it's going to be part one of two. Part two may come next week on Monday. I'm going to start out here going over what I call the official trade ideas on the site. So again, there's a lot of parts to this video, and I encourage you to, if you want to take full advantage of the site, at least listen to the first part of this video. Second part, I'm going to go over the active trade ideas. I'm going to break them down between long and shorts. And I'm doing the shorts now, even though we're in a bull trend, bull market, to just again continue to highlight and reiterate the fact that the only way, or the easiest way really, to make money for months now has been individual security selection. And so I'm going to do this and break down the shorts and the longs. And I'm going to talk a little bit about how to, use the trade ideas, the categorization or archiving method I use. It's not perfect, but it's something I came up with years ago, and I think it works pretty well. So with that being said, when you go to the top menu of the site, you have trade ideas here, and there's categories and subcategories. So when you hover, the menu pops up here. I can make it a little bigger for you. When you hover, subcategories pop up. And so if you follow, hopefully you can see my cursor. You have them by categories, setup. And if you're curious as to what that is, maybe you're new to the site, I give an explanation of or a definition of each one. And I'm going to read it for you. A trade setup. Now, a setup can also be an active trade. So they're not mutually exclusive categories. A lot of these categories will overlap. But a setup that is only a setup is exactly that. It is not an actionable trade. It is, as it says here, potential swing trades or longer term investment candidates that are setting up in a well-defined chart pattern. Once and if, or if and when the pattern triggers, and if, for example, a breakout or breakdown, that trade will then become an active trade until either the price target or targets are hit or the trade is stopped out. Or for whatever reason, once in a while, I'll come in, I'll modify the trading plan and say I'm going to close it out early. But I'll always communicate that at the time, in real time or in advance, and to why I might close it out early. In other words, before it hit the maximum suggested stop or the final price target. Okay, so as I said there a second ago, some active trades will also remain in the trade setups as long as they're still providing objective entry. So that's it. So you can go down, and then obviously an active trade, as I mentioned, if sometimes I will post a trade first as a setup with a pending buy or sell signal that may never happen. If it doesn't, then eventually I'll just categorize that. If the breakout point isn't triggered, then it just goes away, and it was never a trade. So it wasn't a failed trade. It wasn't a successful trade. It was just a potential trade that never happened, never even triggered an entry. And then so if it goes to active trade, and again, every now and then I'll go through here. I did this today. I spent some time batching out the old stale trades. And again, those are trades that either hit one or more price targets or the maximum suggested stop. And this is where, and I've addressed this before, when I first started this site, I tried, and it was a very laborious process, keeping a tracking form, a spreadsheet. But it became, over time, I've learned nearly impossible because the way I share trade ideas, the way I trade personally, and that is quite often I'll scale into or even at times scale out of a trade. That means take a starter partial position and then add once the next buy or sell signals trigger. It all depends on my degree of confidence. Quite often I'll take a full position on a trade. It depends on the pattern, the trade, and then on the flip side, same thing scaling out. Whether it's a stop, sometimes I'll do a hard stop. Hey, I'm out if it hits this. Other times I'll start set a one or two stop losses at different levels, just kind of scale out. If it drops there, I'm going to sell part of it. If it drops down again, I'm going to sell the rest, right? And so therefore there's almost an infinite number of it's impossible to track that because it depends on everyone's unique entry point and exit point or points. Okay, so hopefully that makes sense there. And again, I archive everything, every single post, every single trade idea for accountability. I want to tell you guys, I've been doing this a long time. I am not selling snake oil. There's enough of that being sold out there. And so I make sure everything's time stamped. My videos are time stamped. The charts, the trade ideas, win or lose, are all archived. You can go in and find them, study that. But again, I want to do this video to kind of, it's a great time because 2025, it might seem like a banner year, but it was a good year for the market, but a little bit above average. I'm going to just show you real quick, and then I'm going to get into the trade ideas and show you again that individual security selection or diversification is really the way. If you want to beat the market, that's the best way to do it. There are times, there have been plenty of times in the past where the indexes are volatile, volatility is high, go up, down, and you can beat the market by trading the market. That means trading SPY, QQQ, futures, whatever. But nobody, again, if you're a very active trader, is going to beat the market for the last 6 months. It's gone, pretty much flattening out here. This is where the easy meat getting sheared off the bone comes. Being short there, gaming those counter trend bounces, coming along here. In other words, when volatility is high. Then when volatility, the VIX starts going down towards the bottom of the range, volatility decreases, you do get some swing trade opportunities, and I highlight those all the time, and that's it. But within any of these periods, again, and I encourage you, go back, look at the performance. You should be able to easily outperform the stock market, make it worth your while. And I say that because, at the end of the day, if you're not going to beat the market, just put your money in an S&P 500 index fund if you have a long enough time horizon, and just match the market, right? And then go out and golf, fish, wine and dine, do whatever you want, and you don't have to sit in front of a computer. But if you're going to try to actively trade, it is work. It's not free, and I do a lot of that work for you. That's what this site is about. I bury myself in charts every day. I love this. I share what I see. I don't share in your gains, and I don't share in your losses. I provide analysis, and you decide which trades or securities I'm covering that mesh with your alignment or your views of the market or that particular security or sector or commodity, and pass on the ones that don't, and also that mesh with your trading style. Maybe you're not an active trader, maybe you're more of a trend long-term trader. So I'm going to talk a little bit on that more in some of my themes for 2026. I'll tell you right now, it's still very much like the commodities, especially the ag commodities. I haven't given up. I'll get to those in the next video, probably when I cover longs or a separate one. So going forward, this year, as of now, and things may change. As I mentioned, I like staples, defensive stocks. We're starting to add back. I've given you utility, at least one lately, that NFE, that's a utility company. Big potential if hit, it'll be 140% profit. Even that first target alone is going to net you about 41% if hit. But the point is that these are all spread out. Spread your bets. And I don't do it for the sake of diversifying. I'm just pouring through charts, and invariably I'm going to find bullish stocks and commodities in different areas at different points in time, and some that are bearish. But we're going to go back to talking about, just real quickly, the trades that have been completed. So if I go here, trade ideas, these are all trade setups. Let's just go to the completed trades archives. It's all the way over here on the right. I don't know. Hopefully you can see my little white cursor here. To the right of the drop-down box, and they're by category as well. If you click this top one, you're going to get all completed trades. Let's just do that now. And so they're archived by year. Again, this is not a perfect system. I also want to share, as I often tell you, the majority of the trade ideas I share are not going to show up in here because I cover them in videos. And due to the category and tagging system, those are two separate things. These are categories up here, and then these are what are called tags, or what I call ticker tags. And so each individual post, I have to assign a category, and they can be multiple categories depending on what I'm covering, right? The stock market is one. So if I'm covering, let's say, short trade ideas on the indexes. That's going to be both a equity market analysis as well as short trades, right? And then you have the tickers. These are your ticker symbols. So they kind of work together in this whole archiving system. So therefore, when you come into, in this case, we're looking at all trade ideas just to give you an idea this year. And again, this is not all inclusive because there are many that I'll cover in the videos. And if I do a video that covers many different sectors, different stocks, they're all going to be tagged in there so you can see them in that video, but I won't mark it as a long or short because I might cover long and short trades in there. So hopefully that makes sense. Just you can watch the videos, you're going to get most of the trade ideas there. And if you ever want to find what you're looking for, this archiving system, you can click the tags anywhere hyperlinked. When you see I'm moving my cursor down on SPY, QQQ, and if you come in through a category like this, let's just click on OSG here. I came in through the archives of completed trades. So OSG, it used to be when we first shorted it back here, was first given, this is a typical progression of a trade idea on the site. And I honestly just picked it kind of random to get away from the markets because that's so much market analysis just to kind of show you. I didn't cherry pick it. But it's the life cycle of a typical, especially an official trade. Those are the ones that I give you a screenshot of a chart so you can take your time, replicate that chart. And it's first given as a trade setup. And so as it said here, it was first a trade idea. And click on it. And so it was a trade idea. Oh, it was actually actionable at the time. It wasn't just a trade setup. It was, and as I said, some I see at the moment an opportunity. And so boom, we shorted it right there at 10.25, calling it down here. 4 targets with reactions likely upon the initial tag of each one. I will often give you my thoughts if and when each target is hit, whether I think there's going to be a tradable reaction, little or no reaction. And so the progression of that trade, like any, it's either one of two things or a combination thereof are going to happen. You're either going to hit your final price target or a price target, or you're going to hit a stop. Now, in many cases, and as I go through these trades in this video and the next, you're going to see there's a lot of trades that have hit both price targets, then went on to hit a stop, but they didn't hit the final target. So what I consider, what was that a unsuccessful trade? Is that a successful trade because it first hit the first, second, or third price target out of 4? Again, it all depends on, did you take profits there, or were you holding out for the final target? And that's the primary reason it's impossible to. But you can then go into those posts, look and say, oh, with my trading style, yeah, I would have that one hit the second target, which was really good support. As Randy said, it was the 200-day moving averages. He expected a bounce, so I covered there. I was waiting for a reentry, and that time never came. So that person would have, in that case, covered, and would be a profitable trade. All right, so this one, I won't go through them each. You know what, I don't always update each and every trade, but in a lot of these I try to because I have price alerts or I'm in the trades. I'm not in every trade. I don't take every trade I post for you for many reasons. Number one, I don't have unlimited capital. I don't have, I may not even believe in a trade, or, if it's objective, I'm not going to share it with you if I don't think it's objective and has a good chance of playing out. But sometimes I have higher or lower conviction on a trade, or maybe it's an overlap. Maybe I'm trading a certain sector and I might have the ETF, but then I'm giving you individual stocks and I'm only trading the ETF. I don't want any more overlap or an overweight in that sector. But I keep finding new trade ideas. So hey, if I have my allotment, let's say I want to be 20% long healthcare sector, and I already have my fill, I'm not going to keep taking any new healthcare stocks in that sector, but I might share them as trade ideas. All right, and then so this one went on first, second, third, and then final target hit. That's a typical progression of a trade, obviously on a successful one. Stop, if it says max stop, that's generally means that I've calculated a stop using a favorable risk-reward ratio, assuming one was targeting the fourth and final target. So here's a trade, like many. Again, you go back on the site. We don't nail everyone like this, but quite often we're in with near impunity at the high or low on a stock. It's my trading style. I'd like to catch tops and bottoms, something that I laugh when I hear the people on CNBC and Bloomberg always say it can't be done. It's just randomness. Again, we don't always get it right, but that's what stops are for. So when you try to catch a falling knife on a long, yeah, you can get cut. You can get your hand cut off if you don't use stops. And I'm not saying that we went long here. This one kept going, but and that's fine too. I'm not always looking to get in at the short things at their high and then cover at the low. A lot of times we can do it, but either way, that's it. And this is swing trading, guys. You make 32% in a matter of a couple months. Annualize that out, right? And if it's 2 months, you make 32%. 32 times 6 is your annual return, on that, portion of your money. And most important, it should never, ever, any one trade should never be your entire account. And I have to continue to say that because every now and then I feel bad when I hear someone's that's just getting crushed because they're short silver right now, or been short the equity market since the first short trade we had earlier this year, which has been stopped out 10 times over. You gotta use the stops, and your stop is going to be again commensurate with your risk tolerance, your stop loss, preferred risk reward ratios, your price target, and all that good stuff, right? All right, so let's move on and close that. I think I click on it, should close. There we go. Let's go back to, that's not working. Let's go back to trade ideas, completed trades for the year. Again, I've updated most of the active trades, both long and short, today. I spent quite a bit of time doing it. It's what I've been doing most of the day. And you can see, remember, we're early, and this is, we're only 2 weeks into the new year. And these are all the ones that, way this works is that would be the last update on the post. So kind of, remember, the equity market's always a hybrid of just outright coverage, because I cover them all the time, and or trade ideas, in, out. Some are short-term trades, some are longer-term trades. Individual stocks are a little more straightforward. And this is not all inclusive. Mondelez, for example, I covered in the video yesterday that we hit the second target and told you we'd probably get a reaction there, but that was in the video and there were a lot of other tags, so I didn't include that here. You're not going to see that it hit second target. But what you can do is click on MDLZ right there, which I just did, and see that I updated it yesterday. It was included in here, and then you'll be able to find it in that video. And that is, again, just use an example here. We hit it yesterday. We were right. We had just kissed T2. I said reaction is likely, and we did. We had a pullback so far. It was about 2%. Powering back up. We hit it again. Again, this level was going to advance, and it's another test of that level. And we're either going to pop it, and if so, if it's a solid pop, especially a daily close, it increases the odds we go to T3. And if not, as I like to say, I have a lot of yogiisms I've made up in trading, and as one of them is resistance is resistance until unless taken out, right? So that's it. So it's resistance, and we either consolidate, pull back. Yesterday I told you, any pullback to the trend line or T1 would be objective re-entries. And at the time, what I look is what's the stock market doing? What are the consumer staples doing? Because that's part of that group. Defensive sector, consumer staples, things like that. Okay, not to beat a dead horse, but I would encourage you to, if you don't, because I get a lot more comments on there's a few main things, and I get comments all the time, of course, on the equity markets, that's, which makes sense, stock market. And then the hot things, especially when they're in vogue. And those are not so much natural gas. It's more of a niche thing. It's a big mover. But gold, silver, Bitcoin, when everyone's interested in Bitcoin, usually I start getting inquiries about it when it's, making new highs. Not when it's low, but sometimes. And the things like that, the mainstream stuff. Things people talk about at the cocktail parties. But, trading for a living, or if you're trying to just outperform the market, maybe you work a job or you're retired, it's just blocking and tackling, and it's these individual stocks. And I'd encourage you that go up and look for the gain, and look for the winners and look for the losers. They're all archived, and you will see a vast outperformance on just about any given year of the stock market. So I continue to try to impress that point because I know a lot of folks only want to trade for whatever reason, QQQ or SPY or whatever it is. All right, we're going to now change. Oh, and then you just click on the year right here, and you can see all the completed trades. You can also then look at the subcategories, only the completed longs and only the completed shorts, right? So we're going to go right now to the active ones. These are the active short trades, or we could look at short setups as well. Either one, we'll just look. I have active trade shorts. And again, I'm doing this in a very contrarian manner. That's who I am. I loathe hindsight analysis. When someone, Kramer and the Boltards they march out on CNBC are going to come out when the S&P is finally down 30, 40%. That's when or more is when they're going to tell you to start selling, that we're in a bear market. Most of those folks, again, it's the nature of the industry. I used to be in that industry, believe me. I started out as a stockbroker at Merrill Lynch and then went on to regional bank brokerage programs, worked my 15-year career there. And, and again, but I wasn't advising my clients on active trading. And so, yes, my pitch was always, I don't think I ever shorted a stock for a client. It's long because, you come in, you're helping people meet their retirement goals. So that's a different vehicle. However, what I was going to say is, they're fed the Kool-Aid, and they should be drinking the Kool-Aid. That always buy the dip. The market will go up. Don't try to time the market. I mean, if you've heard that one once as a stockbroker, heard it 1,000 times. It's time in the market, not timing. Yes, again, if you are here to plan for your retirement, you're 20 years old, listen to the late great John Bogle, who founded Vanguard, and put your money in a low-cost index fund, and set your 401k to automatically go in every month, and you will ride out at least a few, or if not many, or several bear markets in your lifetime. And 30, 40 years from now, you're going to have more money than today, right? That's about as close to a certainty as you get. However, between now and then, again, there's going to be a lot more opportunities for active traders. And I believe so more in 2026. I believe it will continue to be the year where active trading shines. As I think I showed you a minute ago, the S&P 500, if I didn't finish my train of thought, went up. This is 2025 right here, last year. Here's my year break. I'm going to show you right here. There's January of 2025 right here. There's the end of 2025 right here. So I'm going to measure it for you real quick and show you at the beginning of the year. That's December 30th, close enough. Up to the end of the year, about right there, the S&P gained about 16%, if I did that right. Yeah, I think I did. Let's try it one more time. 31st, there it is. There's January 1st right here. Grab that point to be exact and precise. There's December 31st right there on that candle, and we closed down that day. So yeah, 15.7. We'll call it 16% gain. But the real story in there was you had a 22% drop, which would have stopped out just about any reasonable alongside trader, especially swing traders, and also sucked in a lot on the short side, probably towards the end there when we were short here covering down there. And then we had this. So again, that 16% doesn't tell the full story. It was 16% that was made up of a 22% drop followed by a 40-something% run off that level. So, and that was, it's a good example of a year with extremes due to Trump and tariffs and everything else. And yeah, the whole thing here is a secular bear market, but longer term, and I don't want to digress too much, but you have to just pull the S&P and you go back to a long-term chart you really want to see. And I've commented on this many, many times in the past that even this, you can go back to the 60s, and I've done the long-term analysis before, but where the market really started to go off on steroids was right about here. We had multiple, it doesn't look like hardly anything on this. This is log scaling. That was a year plagued with decades of bear markets and subpar flattish returns in the stock market. And then this point right here, which I've covered by many, 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 many times, by no mere coincidence, and as strong as anything. My convictions are as strong as anything I can convey in financial analysis and investing and the economy. It has to do with this. This is a secular bull market in interest rates, meaning falling rates. That period of subpar returns and negative returns was plagued by rising interest rates. And so I really try to revisit this chart often for new subscribers and to reiterate that if you are expecting anywhere close to the returns, and most people are, it's skewed. The average annual returns has been, that's a multi-decade, 40 plus, almost 50-year bear market and falling rates, which is stimulative and causes stocks to go up, causes the economy to grow. And if my read on the charts is right, which I've gone over many times to support the case why that is over, and we've most likely embarked on a new secular bull market in interest rates, it's going to take a long time to play out. There'll be plenty of cyclical bear markets within there where rates drop, and that may or may not be bullish, should generally for equities at the time, but again, it depends on the conditions. So let's get away from that. I just wanted to, I have to loop back to that because I often talk about my longer term bearish outlook, where I think the equity market will not see anywhere close to the returns we've seen for the past 30 plus years. Right or wrong, that isn't how I position myself. I position myself day in and day out, and that's the whole point of this video. And the trade ideas I share with you are based on actionable, timely stuff. That just helps formulate the bigger picture. But we're going to go back to these trade ideas here. So we're going to go over the short trade ideas. And again, I'll cover the longs in another video. So this is both an update to the existing shorts and more so, and please hear what I'm saying here. If you look at not just the ones completed year to date, again, you can go back there. I just showed you how to check the ones year to date, and go back and even in pick a good year, a strong year, 2025, mostly up, right? And go through there and then net out the losers. Look at the, assume the maximum stop. And if you're going to do that, you also have to look at the ones that hit targets, then hit the stops and figure out where you would have been. And my point being that if you only just took short trade ideas and then, kept reasonable stops, didn't let your stops run past any reasonable amount. When I say that, just for clarification, and if I don't state, I usually try to state or give you a suggested stop. But if I don't do that, you can assume any trade idea on the site has a minimum of 2 to 1. That's not a Z. I'm trying to hand draw. 2 to 1 risk reward ratio. So that's a minimum risk reward ratio I'll use. Sometimes, again, if I'm day trading, it might be a 1 to 1, but let's not go to day trading. So meaning if your price target, we're trying to make $10 on a short trade drop, you should have a $5 stop loss, right? 5 points, right? That's a 2 to 1. You're risking 1 unit or $1 loss to make 2 units or $2 of profit. And then quite often I use a 3 to 1 or better. And a lot of the trades, especially the official trades, I'll give you those suggested stops there. All right, so, and again, you can do the same thing with the long trade ideas. You go to completed longs and you look at year to date, or you can go back 2025. And again, you will see, as I've been mentioning, we've been in a market that's gone nowhere now for many months. And yet, almost all of these are double digit plus. You've got, trades that are, 10, 20, 30, 40% profit. Same thing last year. So let's get down to where we started. Back to the short trades. Let's go to look at active trades because that's what I updated that category. I have to go to the setups next. Apple. We'll go through these one at a time. I'm going to move this away. You can see all the trades here right now. You can revisit this or pull it up on the site. And I'm going to move this screen away so I can focus on real estate on the charts in this video. Let me move that 1 second. Okay, I'll simply drag this away. I'm on, this is my big monitor, my 43 inch, so I can got plenty of real estate elsewhere. And we're going to run through these again for both an update, primarily an update, and give you my 2 cents on these. And again, if there's trades, which are a lot that aren't going to show in here, if you want an update on any trade, long or short, or even anything you're watching, even I didn't mention it, feel free to bump me. Usually the most recent post in the comment section, I'll check those from time to time. So Apple was one I already gave you a check mark. Put in a divergent high, breakdown back test. We had our first target, and lately we've been forming this potential bear flag pattern. We have now broken that. We broke it yesterday. Zoom in. I just updated this for you as recent as yesterday. We had a stick save there. No close below. This is a daily time frame, so all that really matters is how you close on at the end of the day, 4 p.m. candle. And that was a sell signal, and there's follow through today. So that's a check mark. Now that check mark can get undone. A bear flag should roughly resemble, the impulsive drop on the flagpole leading down. So I just wanted to point that out. And if we can clear the recent low, so I put a line here. That's the low from right here. We tested it today, but we're a little above it now. It's about 256. Solid close under there will most likely increase the odds we're going to go down, hit my second, and then third target. All right, so just want to point that one out. All right, next one I had on there, and just going in alphabetical order here, or no, they're categorized. Is it by? It doesn't matter. I'm going to go through them all. Sienna, SCIEN. This one, I'm guessing we shorted on the bearish engulfing breakdown of that trend line, and it's been back testing. So there's your max stop. Again, max stop is going to be measured, depending a final target hit. That's T3, and a little asterisk tells you that's first of the uptrend line or the price support level. Right now, they come in roughly together. But I can't predict the future. I like to try. Charts help me to kind of visualize where things might be going. That's what technical analysis is all about. That's why I call it right side of the chart. I like a buffer, but there's a chart. So that's today. Anything to the right of that is in the future, right? This is all history. That's what technical analysis is about. Using analyzing the price history to predict the future, where things are going to go. Of course, it's not 100%, but it's better than anything out there, I promise you. All right, so what I can see here, I'm going to draw a little line. You've got a little wedge forming. We're back testing. And as you've heard me say, if you follow me for a while, what I like to see, the problem with back testing, when you short, you are back testing an uptrend line that has a positive slope, meaning the rise and run is positive, rise over run. I like to see an impulsive rejection because you can just keep back testing and then your short's going underwater and you may recover the trend line. That wouldn't be good to see a solid recovery back above there. It's not the end of the world. Sometimes it happens, and that's it. So you have a stop right here, and it either pans out or not. What I want to see to help firm up or increase the odds T1 and T2, 3 will be hit is an impulsive rejection off there. So there's one slightly underwater, but well within a reasonable stop and still an active short trade. Oh yeah, guys, and the takeaway too, especially again, go back for the last few months. Look at the stock market, the S&P going to new highs, all-time highs, and look how many of the short trades were A, not only successful, a lot more than were losers, but B, the percentage gains. God forbid the next correction or bear market comes. These short trades, which I'm always going to keep a mix thereof, longs and shorts, they're going to vastly outperform. They're going to rock. Instead of 20, 30%, you're talking 40, 50% potential plus on a lot of these trades. So just keep that in mind that, if you can pick the most bearish stocks and profit from that in a bull market, it gets that much easier when the trend changes and you're swimming with the tide instead of against the tide. But you can still successfully go take counter trend trades. That's longs and bear markets, shorts and bull markets, if you pick the best looking charts. And I try to be selective to favor stocks that don't have a huge weighting in the index. Like I always said, shorting any of the mag. We're short Apple right now, but that was again, it was the charts told me to. And you can also see, since we shorted Apple, what happened. Well, now it's being talked about. The Mag 8 aren't so magnificent anymore. That's what the headlines are literally. I saw one the other day calling them the Unmagnificent Seven, they called it. All right, so, and, charts told us ahead of time that's probably going to happen, especially if Apple goes down as much as it ddid. It's not going to do that with Mag 8 ripping to new highs. All righty, next up, FHN, First Horizon. So this is one, I'll have to go to the original post, which I'm doing to the left of the screen that you're looking at. Shorted it on October 23rd. I have to look where. Let me click the chart. Right here. Snapback rally. Oh, yeah, right. Oh, my bad, guys. All right, here's the chart. A lot of times when you see, I hand draw in with my screen capture software the stop. So that one we had a potential, and I even said at the time, either an objective short there on the kickback to the 200s and or means, or if you want to be the second mouse that gets the cheese, you wait to break that bear flag, which never broke. And means you take a starter, but don't go to full until you break that level. So at most it was a half position with a stop right there, relatively small, just above that 270 resistance. So in this one, I need to move over to the archives because I had hand drawn that in. I didn't have it here. And then when I put these lines like this, it goes all the way across, and then I can set a price alert. And that was right. I'm looking at that other chart I just showed you. Right about, it was on that reaction high. Oh yeah, it was right there. Just above that 269. All right, so that one's long since stopped out, and for a relatively small loss relative to what the price target was, about a 5% loss. I'll update that. So that's a stopped out trade, but it's come full circle, by the way. I just noticed that. So I'll update this, move it to the archive since it hit the suggested stop a while ago. And again, if I put these horizontal lines, then I set the alerts, and those are the times I get it out to you. I wasn't in this one personally. It's kind of gotten buried like a lot of them do. That's the new support level that needs to break, 2364 divergent high. And this would be my first target now up here. I'll just do it since it's already stopped out. That would be T2, and there's a new setup for you right there. All right, next up. Again, I'm looking on another monitor. Bear with me here. We had, I know Lily was long since stopped out. I thought I updated that one. Shopify, let's see. Did I update? No. See, here's one. It's just taking time because the market's flattening out. We would have shorted, let's see if that's where I shorted it for you. December 3rd entry. Shopify, here I can pull it over. Shopify, we shorted right here at 159.56, 4 targets with a stop at 178. And we hit pretty much, that's effectively, I always say, and I'll repeat it, always cover a little bit above the actual support levels I give you. That's what I do on the trades I take because sellers like myself will step in early. If all I see a level, you don't want to if it's, let's say a 10-20% profit, are you going to try to eke out the last 1/10%? So I'll always cover a little bit above. A little bit is relative to the price. It's all varies on each one, but that's effectively a hit. You came within, fraction of percentage point, and then it bounced. And that's how all these trades typically work. That's why I list multiple targets. You can see that in the FAQ page. Upon the initial tag of each price target, a reaction is likely. And so this is still very much a in-play trade, and that's how it should play. Arrows just denote reaction points. They don't show the bounce. I try to gauge that if and when at the time. Next one up was, bear with me, probably should pause the video when I have to go back and then click the back button a few times. Visa, this is another one. Please remember, another of my yogiisms I've made up years ago. I like to say, you've heard the saying, in life, patience is a virtue. In trading, it's an absolute necessity. So here's Visa. We shorted Visa. Let's see. Let's pull it up. Visa swing trade idea. Here we go. Here, I need to make that bigger, don't I, for you guys? Visa, we shorted right here on the break of this trend line right there with a max stop of 380.60 and a total 4 official price targets. Shaded, less bright, dotted arrows are potential additional targets. I'll always address those at the time, but that's the final target, 322.40. Again, entry here was on, they're always time stamped, June 9th. And so far, so good. It's just taken a while to play out. So we shorted it right here. This is another instance of almost nailing a top on a stock. We quickly hit my first and second target. Then we wanted to hit my third target. We danced on it for months. I gave several updates in here. Told you it was just, we need to take that level out. At the time I was updating this, that we went in a sideways range. And that once we broke that range, which was my preferred scenario, we'd also break this uptrend line. See this white uptrend line right here? And once that went, it should be a quick ride down to T4, which it was. Now we had the biggest drop in Visa, and since the the tariff scare. And what happened? Well, we hit and bounced right off that level, bounced back up. Like the market's been in a trading range, now we're back down to T4. Remember, we already hit T4, and all I expect is the initial. The reaction off an initial tag of a target. Like T3, we hit it, we bounced up. T2, we hit, we went through a little and then bounced. But on this one, we hit it there. We had a healthy bounce. Stock got oversold, probably a little divergence at the low. So it doesn't mean that we can't break that. In fact, if I thought 322.40 was support, way back here the day we shorted it, which I did, that was your final, yeah, that was a final target, guys, by the way. I added additional targets for you is what I've done here. So I should be clear. Remember when I just showed you that. T4, and then those were the other potential targets, and I still like it. But now we have to break T4, and the fact we've already hit it and checked it increases the odds we're going to. In fact, it looks like it's probably flagging right here. Sharp move down. Yeah, I know what Trump's threatening to cap credit card companies. Well, he is. You would think, and Ron, he wasn't a traditional Republican, but they tend to be pro-business and in pro-economy, and they understand things. Price caps and things like this. I mean, it's like Madami with the price caps on housing in New York City. You just don't do that. It's not free markets. It's not capitalism. It doesn't work well. Anyways, I'll get off that, but it certainly wouldn't, if it holds, it's not going to be good for the credit card companies. All right, enough time spent on that. Again, final target was hit, but these are additional targets if and when T4 goes. And at this point, you don't short it here. That's one thing you don't do. If anything, you buy Visa here. Why? Because it's at support. You have two options when a stock falls to support. If you are bullish, you buy it with a stop below and hope that it bounces off the support if that's your expectation. If you're bearish, you wait for the support level to break, then you enter a short position. So that would be the only two trades. Either go long here with a stop below or wait for that T4 to get taken out and then swing it down to these next targets. Okay, what do we have next? We have AGO. Here's another patience pays kind of thing. And again, it's the market. We have to trade the market we're given. So, my crystal ball back in February, late February, last day of February, second last day of last year, 2025 told me that we were going to break this trend line. And it was before we even broke it. It was given to you as a trade setup. On break of that trend line, I gave you 1, 2, 3, 4, 5 total targets. And saying that one would be about a 30% drop if hit off the T5. And so what happened from there? Well, this is the current chart. I'll zoom in a little. So we shorted that trendline break. We hit T1, which I'm zoomed in here, so my lines moved. This was T1 down here, T2, T3, T4. And so boom, quick, 1, 2, we bounced off 2, hit T3, cut it right down, hit T4, bounce. This was very oversold. And like a lot of things, it locked into a trading range. But it never exceeded any reasonable stop if you're targeting T5. Now, if you're only targeting T1 or 2 or 3, well, first of all, they were hit. Let's just say they weren't. Then your stop should have been lower. But if you were targeting T5, I'm just going to measure it for you and tell you again how to do this if it's not clear. So that was from the divergent high, 30% drop. From our entry point, it would, if hit, it's going to be 25, 24% drop. So then you could easily give yourself a, let's say a 10, let's call it a 8% stop loss. And that's a nice 3-to-1 R. That's up there, somewhere around right there. So the person holding out for T5 just has to be patient. They haven't exceeded their any reasonable stop. It's just taking a while to get there, and it may not ever, but now looks like a better chance because we finally put in a divergent high and then a sell signal, that wedge break. There's a little rising wedge, and we're currently testing the 200s. Here's where we lost the 200s. That was a quick ride down to T4, and then we recovered, and we've been dancing on them, but it's been sloppy action. It's not one of my favorites. I wouldn't trade it, right? There's a lot of other better fish to fry. Again, the point of this video is to update these trades and also talk through how, to take advantage of the site, how to use these trade ideas, how to trade, and set OCO orders. One cancels the other. Set it and forget it. All right. And believe me, guys, in some markets, again, if this was all in a bull market, you hand me a bear market, and these stocks will quickly go down and hit their final targets, and usually a matter of weeks or months. Remember, stocks almost always fall a lot faster than they rise. Yeah, one of the reasons I love shorting. All right, what's next? Let me pause it. Carvana, nice meme stock. Okay, so we've had multiple trades, multiple entries. Reminds me a lot like the stock market. I'll keep taking these shots. I believe they were all profitable, but in many cases we hit, like right here, I can't remember if we had additional targets. There was a stop here, or a trade here. Oh yeah, okay, the trade first was profitable. T1 was hit, T2. This trade's now closed out. So we shorted either here on the trendline break. You can look it up. That was a different trade. And I gave you a stop on a close above 400. So we went on. It avoided the stop, hit our first, second target. I believe I would have had additional targets. Then the stop was taken out. But then I gave you a new setup right here. And this is the current active trade. So this was on 9/11, day of infamy right there. But anyways, a breakdown right there with a stop. Oh no, is that the same one? Yeah, I'm sorry, my bad, guys. That's the same one. So there were your other targets. The most recent one was swing trade. Re-entry point here. Must have been given to you in a video. Bear with me once. Absolutely. All right, this would have been one of the many covered. So now I click on the symbol tag, and then I see the more recent updates. Okay, so that was, we hit that second target. Then it went on to get stopped out. Again, covered in videos. And more recently given as a trade idea, this video or this one here. That's what it was. Again, with a lot of other ones. So if I categorize that as active short, they're all, and they weren't. Some of these are long, some of these are short, some of these are setups, some of these are actionable. So therefore I have to just put it out as a video with those symbol tags and the general categories, meaning equity market analysis, gold, commodities, whatever category they're in. So there it is. Yeah, so I covered in a video right here, a sell signal on this trend line, and then I gave you 5 new targets. T1 was hit. T1 happened to be that reaction high from that stop. We bounced, and I still very much like this one. This one reminds me a lot of silver. I see huge gain potential in 2026. Once this sucker breaks, it'll probably break for good. It's former meme stock. Kind of had some validation in recent years with the addition of that's last year getting added to the S&P and all that other good stuff. But again, that'll go the other way when the money flows reverse. Either way, that's it. So we're back to entry. And again, it's a question of if we do get stopped out, what's your stop? Your stop is going to be dependent. Were you only targeting T1? If so, you're already profitable. Walk away with the what did we make on that? A quick 13.5% gain. Or you're going for T5. You can allow a lot wider stop if going for T5. Or you're an active trader like I am. You game them little bounces where reactions are likely. So you make 13%, you turn around, you wait for a bounce, back to entry point, then you recycle back in, you close your long out and make another 13 up, 15, whatever it was, and swing the next leg down. T2, I can only tell you at the time we get there. My guess, a little, if any, reaction. The 200-day moving averages are there. That's what truncated that last trade when T2 was hit. And I might have mentioned that at the time. All right, let's move on. Anyway, it still looks good. And when I look at a stock like this, I go to the weekly chart and I just see, I see dollar signs on the downside. Trend line break, back test, major big divergent high, just like we had back there. There's been 3 divergent highs since the stock went public back in 2017. 1, 2, 3. The previous 2 resulted in an 81 and a 99% drop. I don't think it's unreasonable to see this thing drop at least down here from where we're at now to my 4th and final weekly target, which is 87%. That's just me. I know a lot think that's heresy to call a stock like this down that much, but even if it hit, well, we already hit on the weekly, my T1. Remember, a lot of these weekly charts I have on stocks are just continuation of top calls that I made back here in late 2024, and we've made marginal new highs, just like the stock market. And so just like the stock market, QQQ and SPY still have these longer term targets. We hit initial 1, 2, or 3, price targets on a lot of those things, put in a marginal new high, but it didn't change the technical posture. It only made the divergences even larger than they were back at that previous peak right there when the stock fell and dropped down 47%. Again, when you use log scaling, that doesn't look like much, but again, that's a 40%. The stock got cut almost in half right there. All right, next up. In the essence of time, I'm going to rifle through these without pulling up the previous chart. I'm just going to talk about them to try to give you an update. So this is Fifth Third Bank, one of my former employers. Worked for their brokerage arm, Fifth Third Securities, way back in the day. We had sell signal here, back test somewhere. We hit my first target right here. We hit my second target right there, was along with the 200 days. We bounced. And then I gave you a suggested stop there. So this is another one. Is it a question of, do we count that as a 11% profit, or from the entry point, do we count it as the stop was hit there, a 4 or 5% loss? And again, that's depends on everyone's trading plan. I had a total of 3 targets, but the stop's already been hit. So this is no longer an active trade because it hit that stop. In fact, I need to move that out of there. I thought I did, and I'm still in showing there. But I added new targets today when I was going over it. These are your new targets. You have a bullish falling wedge. It's just wash, rinse, repeat scenario, right? What do I mean by that? Well, I like these divergent highs. I like divergent lows to go long. That was a divergent high. We made that whatever drop that was. That was a bigger drop. Divergent high here. And it's really one big divergent high that's even bigger when I go to the weekly chart. I'll draw it out for you right there. And these are the ones that set the stage for not just those 20+% corrections, but for bear markets. Again, I worked for this bank in the past. I know it well. I've traded it for years too. 1, 2, 3, 4, 5 divergent highs. All right. I'm not missing anything. I don't believe I am. We can go way back here at financial crisis. I could put that one in there and tell you that led to the, it did. It preceded the 98% drop into the financial crisis. But let's just talk recent years since then. 42% drop, 67, 56. And I beg someone to convince me why I might think it would be any different this time. It doesn't guarantee anything, but you can see the average drops. Again, this is the weekly chart. So when I see these little, these daily divergences, that's just really on the weekly. You bring over, that's a series of in shorter term time frame, right? This is the daily chart. So these are swing trades, and that's it. So it's setting up for the next one. That line just drifted on me. See, sometimes they do these. It's a funky little thing that happens on this charting platform. All right, next up, MSTR. MSTR, this one Was given to you in videos back here. Well, we've had multiple trades, both official trades and updates in videos, long, short, long, short. You can see targets here, covered short. We covered it long there, and I put it as a long, or at least I know Bitcoin and a lot of these crypto proxies, I might have given you the targets on the 60-minute charts, maybe past that now. So I'm an equal opportunity trader. I don't care Bitcoin. I don't care if it's, lean hog futures, long, short, and that's how I trade. And we trade these down, trade it long, look for these divergent highs, short it, trend line break. We hit my first, second. I still have a third target down here, but just like Bitcoin, I told you that we had positive divergence. We were oversold, probably going to get a little bounce, and that's what's happened. And I still maintain this final target. It's just a matter of is Bitcoin going to run up. I'll cover that in the next video because that's on, was it? Yeah, I'll cover that Bitcoin in the next video. I try not to get off on a tangent because I'm now 55 minutes into this one. I just wanted to do a thorough update on the active short trades. IWM I just got that new one out to you today, so we're going to skip that since you have those live charts. Signet Jewelers, we believe shorted it here on the back test of the trend line break. We hit my first target. Then we hit the T2 was right here, but again, you can see those, I'm not going to call them pesky, but just the 200-day moving averages came in. Back then I didn't know how it would fall. I thought we might come down, hit T2 and that 200-day simple moving average. That's the blue line right here. And what happened is it fell a little slower than I anticipated because the stock market going on to make new highs, yet our short was playing out. And again, that's a common theme here. A lot of these shorts playing out despite a bull market ripping to new all-time highs. Again, try to just for a second imagine how well these things would do in a bear market. And that's why you had potential targets that I never made official. Why? Because the stock market's holding up. These will only become official targets if I have a high degree of confidence that this stock's going to take out the 200s. But what did it do? It got so far, the trade's not over or stopped out, but it hit and tested successfully the 200s. I told you both man and machine alike will step in and buy the 200s. It's just Pavlov's dogs. You ring the bell. I do it often in a bull market, buy pullbacks to the 200. In a bear market, you sell rallies back to the 200. And that's it. Now, the bounce is not taking us to new highs. We have the classical definition of a downtrend, a security making lower lows and lower highs so far. This gets a little wonky here with the bounce off there, but we're still below those previous lows. And so now it needs to take out the 200s. And when it does, because it came so close to T2, see, this is the value add I try to give. My guess is probably going to have very little, if any, reaction on T2 and probably going down to T3 and maybe these guys here. So there's Signet. All I can tell you, there's some resistance here. Does offer an objective short entry. It's minor resistance. It's not super duper. And we just had a successful defense of the 200, so I'm not so keen on shorting this one right now. Not one of my favorites. Can make an objective case, but it will look a lot better if and when those 200s give way. TOST, oh, that's not it. TOST, we shorted this one. Where did we short it? Shorted that 8.6. Let me look at the setup on the other monitor. Must have been on the break. Yep, it was on the break of this bearish rising wedge pattern. We hit my first and second and third target. You can see the reaction when T1 was hit. We bounced to that resistance level. Then we danced on the 200s and we hit my second target. We had bounced back to the 200s were taken out. They were lost right here. And once they were lost, what happened? Boom, boom. Traders shorted rallies back to the 200s. And then we hit my third target. And again, this is this is what I call superior security selection, or individual, outperforming the market with a mix of long and short trades. It's every bit of a downtrend, working the way it should. Bounce back, another rejection off the 200s. We already had a hit and bounce off my third target. That opens the door that sooner than later we're going to break this level, and when we do, we go to my fourth. All right, for those of you still with me, we are almost done. About not even a half dozen more. XRT, retail sector, one that we've traded many times, long and short. Wash, rinse, repeat scenario. Look for these divergent highs, low, divergent high, divergent high, and divergent high. So previous trade, we hit third or fourth target right there. But again, it wasn't that the fourth didn't get hit. I truncated that all trades hard long on August 7th lows. And for all the reasons stated at the time, that before Taco was even a thing, I said Trump would cow down and we'd gone too much, and we had, most importantly, not just my gut feel. I don't have a crystal ball. That happened to be right. It was that so many stocks and indexes were hitting my price targets and key support levels, and we had positive divergence and every other reason in the world to go long when everyone else, 99% of the world thought it was a henny penny situation, chicken little, sky is falling. Anyway, so that kind of says, hey, that's overdone, and so that's it. So we've went full circle, but again, that was a previous trade. So not even, I'm just talking about this is the I gave it to you again right here on. I'm gonna go to my chart to the left. Click on it. July, sometime in July here. We're coming up right here, July 10th, right here on that previous high when we tested that. And I gave you a total of 6 targets. So here's a good example about stops. So we went down. I had a first target zone that was hit right here. We had hit the 200s. Probably should have had a level there. And from that point, we went a total of about 6.8% right now, and from the recent highs above that entry point. And the entry point, to quantify at T6, which is still my final target, would constitute a 33% drop. So that's a trade still active. We just made a marginal new, meaning ever so slight, still divergent high. And I do fully expect another leg down. And once the 200s get taken out, that'll increase the odds that we go down to those additional targets there. Okay, next up is CCL. We shorted that one on July 8th. Right here on the break, I'm looking at my other chart of this. Is this it? One second. Oh, right. Oh, I had trendline, not trendline creep. I have one thing I'll call trendline creep when they move, and then I have trendline disappearance. It was right here. We had a minor trendline. July 8th broke right there. That was our entry point. We hit T1 here. We didn't, I don't see a suggested stop on that drawn on that chart, but to just try to quantify it for you, I gave you a total of 4 targets all the way down here. No, I had the arrows going to 1391, which I still maintain. That's T5. It's just not drawn in. When I got the setup out to you quickly, and I had to then annotate the chart, finish annotating it later. That'd be a 52% drop if hit. We recently made a double top, still divergent high, with about 11% above our entry price. Well within, that's a 5-to-1 RR down to that final 5th target. Let me add that in now. I don't know why it didn't get put there. Again, you can reference the chart from the original post. That's in there. And I still very, very much like this one. This is the one they call the Walmart of the Seas. You can go online and read as to why. Either way, it doesn't mean it's not a profitable business model, but I do think that will eventually degrade the brand and affect sales. Not to mention, God forbid, when the next recession does come, good luck selling cruises. But either way, you need to take out this trend line in the 200. This is the big moment right here. When this level goes about 26.39, 200s will be taken out, that uptrend line, and I believe all these targets will get hit. So still very much, I still very much like that one. PEJ, this is one we've traded long and short many times in the past. The initial entry point was on a break of this steep uptrend line with divergences. Those divergences have only grown larger, meaning we had negative divergence here starting at this point. Broke a sell signal there, and made a marginal new and still divergent high. And we have roughly an equal and still divergent high now. You can see the divergence lines continue to build. And so this one, I gave you a total of 5 targets with T5. If hit, it's going to be about a 28% profit. and we've gone up as much as about 7%. So still within a nice, that would be a 4-to-1 RR. So well within any reasonable 3-to-1 RR. And just need to start moving lower and take out those 200s. I like it here. I don't love it. It needs to break this yellow line I just added for you today, 60.92. I think that will do the trick. Or let's say, you want to be safe, come down here. Say about 60.66. That's the level, I think, because you have a reaction high here, reaction low there, and it's minor support. And that'll take us down and test the 200. We already just recently checked them. Probably take them out next time. And last but not least, or maybe I haven't even looked at it in a while, TPR Tapestry. Where do we short that? Oh, there's my little arrow to show me. I did that today. We shorted it there. We hit our first, second target and triple support. So for me to say I expected a reaction there would be an understatement. You have the primary uptrend line, number one. You have the 200 days. I don't know if you can see them because they're so buried so tightly. They both come in together, the 200 exponential and simple, and that price support level I gave you at T2, 92.79. 3 levels. One resistance level is enough to give you balance. When you have 3 together, why? Because some people look at the 200, some look at trend lines, some look at price support levels. Boom, we hit them all. So yeah, you're going to get a nice bounce, which we did there. But it went on to make a marginal new now and still divergent high, about 18%. So whether you're in it or not, that's up to you. If that would have been a great cover reverse and then look for a re-entry point. So I'm just updating it now because I don't think I updated since T2 was hit. Yeah, that was the last. Let's see, I gave you this when T2 was hit. Oh no, that was the post, but there it is. That's it. So we hit intersecting 200-day for 18% profit, and the 2, and so next sell signal would come on a break below those levels there. Okie dokie, long video, mostly short trade ideas. I'm going to guess very few have listened to this video. I know right now most folks are bullish and looking for longs and giving up, but again, hopefully I impress the important points in here that security selection. There's a lot of in a bear market, there's a lot of stocks will be going long when everyone else wants to just short, or getting clobbered on the market dropping or during corrections. And I'm going to keep the mix steady stream of long and shorts. Again, I'm colorblind when it comes to that. If I look at a chart, as far as the market trend goes, if a chart's clearly bearish or bullish, it's especially on the particular security, those that don't get too heavily indexed, easy to make money on trading against the primary trend on individual stocks. And not to mention commodities and other things like that too, because they have very little, if any, correlation with the stock market. So I'm going to wrap it up here. And Monday, I will do the follow-up video with long trade ideas, updating existing longs, and if any new ones that, if time permitting, I'll share those as well. All right, this has been Randy Finney with Right Side of the Chart. Have a great weekend.